guys, so we are once again going to be talking about the mutual funds that have ranked in the top ELSS mutual funds for the year 2018-19 in the ELSS mutual fund category. And right now we are going to be talking about the fund that comes up at number 5. So the fund at number 5 is a fund that has been typically known for its consistency of return and its slightly conservative approach while returning very good and consistent returns to investors. The fund is DSP Tax Saver. So let's take a look at the top reasons that has really helped DSP Tax Saver get into the top 5 ELSS mutual fund. The number one reason is the stock picking ability of the fund management team. So Rohit Singhania, who is the fund manager of DSP Tax Saver, also manages other funds like DSP Tiger and DSP Natural Resources Fund. Rohit, even in DSP Tax Saver, follows a signature fluid approach. He follows a bottom-up approach without any real sector or market cap bias. And while investing, he really sticks to his mandate. Although flexible, he does not like to venture out of the mandate framework. This is really a plus point for investors who are looking out for a process-oriented fund and a well-managed fund in terms of taking conservative approaches and yet giving a risk-optimal return to the investors. Reason number 2 is the performance of DSP Tax Saver. DSP Tax Saver has performed in a very consistent fashion for a longer period of time. Its trailing returns for a longer period of 5 years and 7 years has been actually so good that it has outperformed its benchmark with very comfortable margins. Now, having said that, it has outperformed its benchmark for a good 8 years out of its 9 years of inception. The fund, one key thing to note is that the fund has really dipped during the periods of 2008 and 11 when the market was in a total rout and mess. But having said that, the fund has comfortably offset the effect by outperforming by a sizable margin in the years 2012 and 2016. So all in all, over a longer period, the fund has performed in a very consistent fashion. So guys, the reason number 3 is the portfolio construct of DSP Tax Saver. So the portfolio construct is really interesting because while ELSS funds as a category tend to take riskier bets within the market cap, this fund remains largely skewed towards large cap with almost 70% of its portfolio into large caps. The fund, as I had mentioned earlier also, sticks to its mandate framework and has always been this way. So which is an ideal case for investors looking for a conservative ELSS mutual fund. So guys, while we took a look at the top reasons that has helped push DSP Tax Saver into the top league, here is a small little thing that investors really need to look out for and understand. The fund is well diversified sectorally, but in terms of its stock diversification, almost 41% of its stock is concentrated into the top 10 holdings, which in itself in isolation does not mean any risk, but could transform into a risk and snowball into a larger risk very soon. So this is the only red flag in the fund which really raise a few eyebrows. So guys, we have already taken a look at the plus and the red flags that DSP Tax Saver has. So just to summarize, DSP Tax Saver as a fund is typically a conservative fund within the ELSS category and has been known to be a consistent performer. The fund manager Rohit Singhania has an outstanding track record in his stock picking abilities. So for investors looking to build wealth in a conservative fashion and save tax at the same time, DSP Tax Saver is definitely a fund one can take a look at. The best way to invest in DSP Tax Saver is through the MyWay app. All you need to do is open the MyWay app, click on Save Tax, and you'll be done investing in less than 2 minutes. As I always say, the best time to save tax is now, and the best way to do it is through MyWay.